All right, good morning, everyone. Let's get going here. Okay, last night's action, the S&P fought to get above that 1850 level, and we finally held it. As you can see there, we managed to close up at 1854. It's our first close above. We'll show it in a little bit more detail later in the charts. But yeah, I mean, we basically nothing really specific to drive it. In fact, we had some rather somewhat soft data on the day. We had Janet Yellen that was out saying that reductions in central bank's asset purchase program would likely continue. So there's nothing really there to drive the market higher, but we managed to finally punch through last night, which I think is significant. Okay, overnight in Asia though we were a bit soft. You can see they're down over 1% on the Nikkei. We're actually only down about 0.5% now. Markets have turned around back to the upside a little bit. In fact, Shanghai was down about 1% at a point. And Aussie also down a bit, so I couldn't really follow the U.S. markets making new highs. I actually think that's really bearish, that we weren't able to, there's no follow through, even though the U.S. punched to all-time closing highs and broke above a significant technical level. The fact that none of the markets in Asia could get going is quite poor, I think. We have a couple things leading that, and that's data out of Japan and Australia that was really soft. We saw manufacturing numbers in Australia that were terrible. We saw mining capital spending numbers and projections for capital spending numbers going out a year forward that were really just totally shocking. And I think that just adds fuel to the fire of the Chinese story, that China has really got some major problems going, because Australia is obviously so reliant on them, and especially in terms of mining and manufacturing for that matter. I think that's a big warning sign again on the Chinese story. So just keep that in mind. That's kind of what we're looking at. Japan, we also saw CPI numbers that were a little bit hotter than expected. I think that's obviously what's gotten the yen strengthening this morning, because of the fact that their goal was to get inflation. Now they have more inflation than they were expecting. Not that it's hotter than they wanted, but more it's getting there. It's making it it's causing inflation, and so they may end up pulling back from some of their stimulus sooner rather than later. So that's obviously why the yen's starting to strengthen this morning. All right, this morning we've got Old Mutual out with full year numbers. We've also got Mondi out with full year numbers, and later in the States we're going to have Berkshire Hathaway. So just keep your eyes peeled for those. You can see there we're looking for revenue of 4.62 billion pounds out of Old Mutual, divvy per share at 5.9 pence. Mondi, we're looking for 6.65 billion euros. And divvy per share at 24 euro cents. So keep an eye out for that. All right, like we said, we had these Japanese numbers out this morning, industrial production numbers and the CPI numbers, which aren't even listed on there, were hotter on the CPI numbers and better on the industrial production. We got the strengthening in the yen because of it. We had local money supply and private sector credit numbers a little bit earlier this morning. I actually haven't had a look at those yet. We've got German retail sales at the opening bell. We've got European unemployment rate and CPI numbers. We've got the budget and trade balance out at 2 o'clock here. And then the States, we've got a ton of data. We've got GDP annualized. We've got personal consumption. We've got core PCE. We've got Chicago purchasing manager numbers. We've got University of Michigan confidence and pending home sales. So a lot going on today on the data front. I was talking about it yesterday with some of our guys here. I don't know if we're in the same situation now that we've closed above the 1850 resistance level yesterday, but something just doesn't feel right. The fact that Asia wasn't able to kind of come behind it, the risk indicators don't look quite right. And for me, this thing's got to push away from 1850, and it's got to do it in a hurry. Otherwise, I think the market's at serious risk of a major pullback. in my mind, and I would put a bit of a timestamp on that in terms of it needing to happen sooner rather than later. Otherwise, I think that sell-off will come quickly. All right. First thing that we're going to look at, let's get into the maps. First thing we're going to look at this morning is the S&P 500. Which obviously, like we just talked about, broke out above that 1850 level. Like I said, it was sort of a bit of a non-event, even though that it happened. It got through, but it only narrowly got through. It didn't do it on big volume. The risk indicators, there was nothing that really came behind it. It didn't look like you were stopping out any shorts on that move. You didn't look like you were, scaring anybody out by this happening. So to me, I think the significance of this level, although is there, something just doesn't feel right. So just keep that in mind over the next couple sessions. Like I said, we're putting a timestamp on this thing. If it doesn't push away to the upside of this number in the next day or two, then I think we'll end up failing here. That's personal opinion. All right, Tiger Brands. Tiger Brands, beautiful breakdown out of the Head and Shoulders yesterday on negative earnings is a bit of a tricky one because the numbers didn't pop up on SENS or on the Bloomberg terminal until much later after the number came. But bottom line is, on the numbers, you can see we totally dropped out of this head and shoulder pattern, and I think the target here is down to somewhere around 240 on this breakdown. Possibly lower, but at least 240 on the breakdown on Tiger Brands. Happened in big volume. The other one that happened in huge volume yesterday was this reversal in Impalas. Okay, and we'll look at here on a closing basis. We'll look at this. In fact, let's just draw it from the wicks for that matter. I mean, we had a key reversal here yesterday in Impalas, which is incredible. That was major support for Impalas down around the 110, 111 level. It's also right next to the 200-day moving average, and we really dropped quickly in the morning down to about 106.50, and it's just a huge buyer came in. We traded about 5 million shares yesterday. It's probably almost quadruple average daily volume, and the guy just was pushing the share the whole day. He was on the bid, driving the share higher. So we very quickly go from looking at support to looking at resistance. I think we finished up about 6 or 6.5% on the day there, and very quickly we could be pushing above resistance. And I personally think that today you need to be looking at this one as a second day play. If this thing opens a little bit softish, or even around flatline, I think it's probably risk reward, decent play to hop on this thing for a second day play. If we get above 123 is the number here. Above 123, I think this thing could really, really break out properly to the upside. And in my mind, it would take out the highs of this recent consolidation, which happened in November, about 137. So we could see a great move there. Key reversal, one of my favorite patterns, is my favorite pattern in the markets. Just keep that in mind. It was a very, very decisive move for Impalas yesterday on the back of earnings. All right, next one, also earnings driven. Looking at Bidvest here. Bidvest finally popped up above that 245.50 level. We've really just been consolidating for the whole month. This thing really kind of reached maybe the target of the breakout on the consolidation yesterday, just coming up and testing the 200-day moving average up closer to 254, I think, which would be that target. But bottom line is the breakout here is significant. I think what would be ideal would be to get a little bit of a pullback down here to around 246. Not to say that's going to happen, but somewhere close to that would probably be a decent little level to nibble on Bidvest. And I think this one also you could be potentially looking at another second day play today for Bidvest. All right, and the last one I'm going to show is we're going to go back and show Kumba again. And the reason why, we talked the other day about us kind of dropping support here, and the previous day's session. But I think where you can also have a look is kind of in horizontal support. If we back this out, let's actually have a look at a 2-year, because you can see the support there as well. But I mean, if we just draw a horizontal line here, there's definitely some sort of support on a closing basis right around here, which works out to about 435, I do believe. You can see here we bottomed here in April of last year. We also virtually bottomed. I mean, we did bottom there, but I know we had a couple closes below it in July and August of last year. But right at that level was also major support. You can see that the most recent, if I just zoom forward here, the most recent consolidation move that we've had that's been totally lateral between 435 and 465, and you can see the closes here are, if you look in the top left corner there, the close at 435.01, the close over here at 435.35. So 435 is definitely our number. We're going to need to see this thing drop 435 before we can really see we can really see a total breakdown in Kumba. In my mind, if we drop 435, I think we could potentially see a proper breakdown here, and that dropping 435 immediately takes us to a target of 405. So I think that's it's quite significant. Remember, this one has a big divvy coming next week. I think guys are probably already bought for the divvy, or they may come in the next day or two to buy for the divvy. But if the stock keeps falling, it could be very much like what happened to ABSA. If you look, back 3-4 months ago, when it also issued that special div and was kind of falling into it, and it actually just created a bit of a monster there and filled everybody up, to their boots and stock, and then it really caused a major sell-off after that. And that's it for today, guys. Thanks a lot.